We all save our hard-earned money in the bank. We entrust our savings, our investments, even our financial lives to them. Banks build an image of stability, security, and impartiality. They present themselves as neutral institutions, looking after everyone's financial well-being. But does this image show the whole picture? Are banks really as neutral as they project themselves to be? In reality, if we dig deeper, we'll see a more complex and often troubling picture. The truth is, banks hold immense power, and this power isn't always used fairly. Behind the magnificent buildings and corporate logos, there's a system that often benefits the rich and influential. The very structure of banks, how they operate, and who they serve, raise important questions about fairness, transparency, and the concentration of financial power. It's time to pull back the curtain and reveal the truth about banks. Despite claiming neutrality, banks often operate to benefit a privileged few. Wealthy individuals and large corporations receive preferential treatment, easy access to loans and financial services that are hard for ordinary people to obtain. This unequal access to capital exacerbates existing inequalities, widening the gap between the rich and the poor. The interests of the elite are often prioritized over the needs of ordinary customers. Banks might prioritize investments in industries that benefit the wealthy, like luxury real estate or speculative financial instruments, while neglecting sectors that benefit the wider community, like affordable housing or renewable energy. This bias towards the powerful isn't always obvious. It can manifest in small things like complex fee structures that disadvantage low-income individuals, or investment advice that favors high-risk, high-reward options unsuitable for those with limited financial resources. The result is a system that reinforces existing power structures and perpetuates economic inequality. Imagine two customers walking into a bank, a struggling single mother and a wealthy businessman. The single mother, seeking a loan for unexpected medical expenses, is faced with mountains of paperwork, strict requirements, and high interest rates. Meanwhile, the wealthy businessman sails through the process, easily securing a large loan for a risky venture at a low interest rate. This scenario, while fictional, illustrates a harsh reality. The banking experience often differs drastically depending on our economic status. Banks are more likely to approve loans and offer favorable terms to those who are already wealthy, while those struggling financially face greater obstacles and higher costs. This unequal treatment extends beyond loans. Wealthy clients often have access to media group, private meeting between wealthy client and financial advisor in modern office, exclusive banking lounge with personal banker assisting client at its stock at it distribute _equally, dedicated financial advisors, personalized services, and exclusive investment opportunities not available to ordinary customers. This two-tiered system creates an uneven playing field, giving the wealthy an unfair advantage in accumulating and preserving their wealth. The 2008 financial crisis exposed the dark side of the banking industry, revealing risky lending practices, predatory loans, and complex financial instruments designed to maximize profits, often at the expense of ordinary people. This crisis, triggered by the collapse of the subprime mortgage market, led to widespread economic hardship, job losses, and home foreclosures. It demonstrated the devastating consequences of unchecked greed and a lack of accountability in the financial sector. But the problem goes deeper than just one crisis. Banks have been implicated in numerous scandals involving money laundering, tax evasion, and market manipulation. These illegal activities, often carried out with impunity, erode public trust and undermine the integrity of the entire financial system. This truly underscores the need for greater transparency, stricter regulations, and a fundamental shift in banking culture towards ethical and responsible practices. The current state of the banking industry may seem discouraging, but there are alternatives. Cooperatives, credit unions, and ethical banks offer a more democratic and socially responsible approach to finance. These institutions prioritize the needs of their members and the communities they serve, promoting financial inclusion and sustainable economic development. Beyond these institutions, the rise of fintech and blockchain technology is democratizing access to financial services, offering new possibilities for peer-to-peer lending, microfinance, and decentralized finance. These innovations have the potential to disrupt the traditional banking system, creating a more just and transparent financial landscape. The first step towards change is awareness. By understanding the true nature of the banking system, its inherent biases, and its potential for manipulation, we can begin to demand better. We can choose to support financial institutions that align with our values and advocate for policies that promote fairness, transparency, and accountability in the financial sector. The power to create a more just and equitable financial system lies in our hands.